Hey traders, Raghee here. Welcome to Charts and Coffee. Well, I'm doing the white tea thing again. So coffee was had early this morning, about 3:40 a.m. when I got up. Moving on to some pomegranate white tea. All right, so great to see everybody. Happy Thursday. All right, so there's not much else to say in terms of what we're going to be dealing with today, other than when we take a look at the calendar. Yes, tomorrow is non-farm payroll, but today is core. Well, we already had the core PCE, so we'll take a look at the market's mood after that. Remember that core PCE is the FOMC sort of pet inflation number. So, we'll take a look at the reaction at 8:30. We already had, well, actually, we're getting Williams now. The Chicago PMI is not necessarily a big mover, but we'll keep an eye on that at 9:45. And then natty gas storage, for those of us that are long natty gas, as I am, we've got that number and some volatility happening at 10:30. So really, we've got OPEC, sort of this large, bigger picture hot zone sort of happening in terms of, will OPEC be following through with the plans to increase output? Yes, it's known, but there'll still be a little bit of a bearish reaction to that number. And if their output numbers are higher by the time we hear from all the energy ministers and OPEC themselves, we know that we might get a little bit more bearishness if their output numbers are higher than what they discussed. Then, of course, there are the persistent rumors about whether or not the U.S. will tap into the SPR, that Strategic Petroleum Reserve. Again, that's always going to be fairly bearish on crude as well. And, when you take a look at the Ukraine narrative, remember, Ukraine was part of why wheat went parabolic, why crude went parabolic. And what I've been really recommending, most of you probably know, because we've been pretty persistent about this now for about 2 weeks, focus on crude oil stocks, focus on XLE, OIH, and XOP when crude pulls back. And if you are going to play crude, be cautious. Go with calls on CL, go with the micro contract in crude oil futures, or buy calls in USO. But I am really favoring the pullbacks with long calls in those energy ETFs. All right, so that is what's going on. Of course, overarching all of this are the end of quarter shenanigans. And I want to show you something here really quick. So end of quarter shenanigans do have a rhythm, and they're basically the monthly rhythm on steroids. So yes, there's rebalancing and such, and it's a little bit more impactful, but and unfortunately, this is behind a paywall, but I'll give you the gist of it right now. This is an old Wall Street Journal article. It's quite dated, but it's still applicable. There was a white paper that was done many years back. The only problem with this white paper that I found when I read it back in 2014 was that it had a very limited look back in the study, which I believe was 10 years, and pretty much followed the behavior, the consumer behavior within a fairly decent uptrend, if I recall the look back on the data, but it's still a really good white paper to read. And the whole idea, and Wall Street Journal did a fantastic job distilling it, is basically this paragraph right here. Institutions must make cash distributions regularly to pension beneficiaries, with the end of month being a popular date for payments. During the last 8 days of the month, and most heavily during the last 3, institutions sell shares to generate cash, driving down prices. Now, this is a tendency. Check out the article. Again, it's behind a paywall, but I don't know if there's free articles with Wall Street Journal or not, but it's definitely worth a read. Actually, I enjoy that article. You fast forward 7 years later, it's still a really good article. But the bottom line is there is a tendency. It's not a setup. It's a tendency for that weakness to kick in the last 3 days of the month. And if you continue to read the article, and if you read the white paper, the other part of that was the bullishness within the context of an uptrend where, yes, there's redemptions at the end of the month, but there's also reinvestments, usually when market participants, investors, traders believe the market has a path of least resistance to the upside. So really interesting in terms of juxtaposing what's happening now, end of quarter to end of month. End of quarter is oftentimes end of month, again, on steroids. All right, so with that being said, let's jump into your questions. As always, that is what our show is all about. All right, kicking it off. RF, Brandon, love the mastery. Thank you very much. Thank you very much. Thoughts on the 6E? Yeah. We're going to talk about this going forward. And basically, I still have a long dollar bias. Why? Because we have a central bank that's tightening rates. And so, do I still want to be in long puts on 6E? Yes, yes. The cool thing about the way that I like to enter 6E with most traders, including non-futures traders, non-Forex traders, is by the ridiculously affordable FXE puts. These things cost $1.30 or less. Extremely scalable, extremely small account friendly, liquid enough to be large account friendly. And so very scalable, which is the mindset. Now, I would also remind everybody that even though we moved higher yesterday, I was walking everyone through where we were in relation to the paper cut level. And we never really got there, but it was close. It was definitely close. So as far as that, the paper cut, just do the math that I teach you, RF, the first day. And you'll notice I bombard you with this particular pair of videos. One of them is that 20-minute Holy Grail video, the 20-minute breakdown of position sizing and risk management. And just follow that. And again, we got very close to paper cut levels, but not enough to boot us out. Now, going forward, this is for everybody. Keep an eye on FXB, right? We want to keep an eye on the 6B or FXB because the relationship the dollar has to the pound is actually better structured than the US dollars relationship to the euro. So we're going to continue to focus on FXE, FXB, and also let's not forget UUP. This thing is ridiculously inexpensive. If you want to buy calls in UUP, depending on whether we're up or down today, we're going to be mildly up. These are going to be 50, 60, 65 cent calls. Really easy, low expense, scalable, liquid, small account friendly, but large account friendly because of liquidity. That's another way to get into that trade. All right. So, yeah, now as far as the 6E paper cut, yeah, we don't do futures in the mastery. I do futures in the futures room. Are there ways to do the paper cut? RF, it's not going to be necessarily the same paper cut arithmetic I share with you all in the mastery because we're trading the options, which is just a different beast. But the account paper cut, the account max risk that you learned in that video applies. All right. Okay. Moving on. Hey there, Christian. Oil, energy narrative. Does the narrative change at all with the release of the Strategic Petroleum Reserve, or are we still buying the dip until structure changes? So I, again, would prefer to buy oil stocks. The thing that's going to get my attention here, Christian, the thing that's going to get my attention here is the fact that we have a high here and a lower high here while we're still getting pretty volatile, but we're getting those dips where we're moving higher. This is usually this kind of action where we're starting to squeeze in because we're also getting higher lows, right? We're getting higher lows. If we have a low here, this is a higher low, higher low. And I'm not a chart pattern person. I am definitely not a trend line person. You will not see me draw trend lines, but there is this narrowing range. And that's usually sort of the precursor to congestion turning into consolidation. And that's going to be really a choppy environment. It's a choppy market environment. Where did there we go. So you can see we're actually going yellow neutral on the structure, which you see down here on the JT multi-trend. And for those of you that have the JT trade flags, neutral. Actually, you may not be able to see that. Hang on, let me show you. Neutral here, and then my face is over the darn trade flag, but you'll see it's also yellow. Okay, so that is what I'm looking at there. And then what does the narrative change? Anytime we're going to talk about, it doesn't matter how more supply is reaching the market, whether it's SPR, whether it's OPEC output productions, if there is a narrative of more supply, that's going to be bearish to crude. But again, please, please, please check out XOP, XLE, OIH. These are corners of the market that we've been focusing on in the mastery. We're going to continue to do that on pullbacks. So does what we're seeing in the market right now in crude oil, in terms of news, look, the structure's already changed, my friend, and likely on the news that you pointed out, but the structure has already changed. And if the structure changes, you're right. The narrative may not change, but the strategy will. It's still a buy. Don't get me wrong. We still want to focus on buys, but we want to do so in a way that actually acknowledges the chop that we're in, not the previous trend. So thanks for the question. All right, Robert, thoughts on XLF, and then within that, Wells and Goldman. All right, so let's do this for the XLF question. I'm going to head on over to the multi-chart for the XLF. All right, so this is the layout of the XLF ETF with the stocks that are weighted within it in order. I think this is fairly up to date. So this is what we call the boats and tide. This is your tide, and this is what you call the boat. Why do I call it boats and tide? It's just a Ragheeism that acknowledges that the composition of these ETFs are, one, high concentration weighted. The percentage of weighting does matter. The boats are not of equal size, right? And then also the boats within it are going to be sensitive to the tide. The boats within XLF, the stocks within XLF, the sector, the ETF, are going to be sensitive to the movement here. And we just want to acknowledge that relationship. So specific to your questions on Wells, and Goldman, the financials seem to have slowed down, even with the odds of 2. I will tell you, the financials are, to your point, Robert, the financials are not moving in a way that would suggest that by the end of the year, we're going to be about 1.5 points higher, really minimally, than we started the year. And that just sort of goes to show that, number one, at what point hitting a certain percentage rate for the target rate, for the lending rate, at what point does that actually become meaningful for banks, right? I've heard that number is north of 2, close to 3, until banks say, yes, these rates are high enough where it's going to actually move the needle for us. I'm not sure if that's true. I'm not even sure if it was ever true. However, there's a real concern that even though it's 6 rate hikes, potentially more, this year, is that enough? Is moving another 150 basis points, another 1.5 points, really going to move the needle for them? And based on what we're seeing, it's really not all that impressive. The best sector in the S&P right now, by the way, is healthcare. So just kind of keep that in mind. And so if XLF is to continue higher, I'm going to focus on an individual boat, just as you mentioned. Wells is north of the 200, which is north of the propulsion, which is that north of the equator level. And Goldman is not. So they're in 2 very different spots on the chart. Being above or below that 200 exponential is huge. So American Express, north. Schwab, north. So start there. But Wells is a bullish, at least bullish hemisphere, not an uptrend. And Goldman, I would actually be very cautious about, because anything like Goldman, anything like Citi, JP Morgan, anything south of that equator, it's not going to be as bullish. It's not in quote unquote bullish territory, if you will. And for me, that equator, when we say we're in bullish territory, what is that line in the sand? And for me, it's the 200 on the daily. All right, moving on to, bear with me here. Good morning, everybody. Let me get past all the good mornings. Great to see everybody. John, I'm currently a member of the Simpler Trading Gold Room. In order to maximize my Raghee exposure, I've never heard anyone say it that way, but I like that, John. Does that make more sense to join the futures room? Oh, you're in the options room. So, John, I'm in the options room once a week. That's my schedule there, and I'm very happy to be able to touch base with everyone in that room once a week. I just happened to be in there this morning as well, so we have another session. I mean, if you want Raghius Maximus, that's the mastery. That is the sector secrets mastery. And then after that, yes, the futures room. But it just depends on what asset class you want to trade. If you're focused on futures, clearly the futures room is the way to go. You get me and a lot of other great futures traders. If you're interested in the way that I trade intraday, end of day, with an emphasis on options, I will show you how to choose your own adventure into other asset classes related to our trade. That would be the mastery. So thank you for the question. I appreciate that. I hope that helps. All right, next up, Megazard. Hey, Raghee, wondering when are you entering an options position? When I'm entering one, how do I approach the actual price of the contract? Do you go with the bid or something else? Oh, okay, so discussion about actual order entry. Love the question. So, it's interesting that when I first started trading, we didn't have transparency. There was no level 2. There was no depth of market. You just basically got, for lack of a better word, screwed every time you got in. Then in the early 90s, we started to get transparency by way of direct access order execution. And direct access, some of you might remember CyberTrader before Schwab bought them. All of a sudden, we saw this whole world happening. And actually, before that, in fairness, got to give a nod to the So's Bandits. So we now have this wonderful ability to see bids and ask, right? If a market is moving lower, right, and you want to be a buyer, and the market is moving lower, the bid is going to move lower as well, right? The bid's going to drop if you want to buy something. If a market is moving higher, the bid is also going to move higher, because that I'm talking about specifically calls. All right, let's talk about calls specifically. So we're talking about calls. If we're trying to buy a call and the market is moving lower, that bid for the call is going to move lower. The markets are moving higher, the bid for the calls are going to move higher. Just what is more perceived to be more valuable. The reason I'm focusing on the bid is when I'm going to enter, when I'm getting in, we're focusing on the bid, right? When I'm getting out, I'm really focused, and usually with profit, I'm focusing on the ask. These are sellers, right? These are all the sellers. These are all the buyers. Now that you kind of have and I am not an artist by any stretch. So when I'm getting in, for example, to a call, number one, I've got to make sure the momentum is working for me. So I want that bearish momentum, because that means the bid price is falling. This is that blue light special that I talk about. So you only have one of two choices. You always want to know where the deals are being done. That's the last, right? The bid and ask, there'll be a spread of some sort, sometimes narrow, sometimes wide, but there'll be a last. And, look at where that last is going off. Sometimes you'll be able to get in at the bid. Sometimes you'll split the bid ask. But my advice usually is don't go at the ask. You don't have to. You don't always have to. If you're getting in with momentum, you have no choice, right? So if you're a momentum trader, ignore everything I said, because your style is not going to be conducive to what I'm saying. But if you trade in the way that I teach in the futures room, in the mastery, and even when I'm in the gold room, we're always trying to take advantage of that momentum. And that momentum is what gives us that temporary ability to take advantage of buying at the bid or splitting the bid ask. And in a lot of ways, order entry is this sadly dying art, because when you key up an order on toss, not toss's fault, but when you key an order up on toss and you want to buy an option, it defaults you to the ask. Maybe I don't want to pay up. Maybe I don't have to pay up. because the bid is dropping, because the last is going off near closer to the bid. Now, you might say, Rag, if it's a penny, what's it matter? Probably not, but it's a habit. It's a mindset. Because what if you're now dealing with spreads that are getting wider and wider and wider? If your habit's always to just pay up, you're going to be, why give up profit when it's your market, meaning bearish momentum is a buyer's market. Think about it that way. Awesome question. And that's just sort of touching on that idea. And oh my gosh, did 20 minutes go by already? Wow. I'm going to be heading over to the options room and the futures room right now for the open. Everyone have a terrific morning. End of month shenanigans, caution day. Just be ready for craziness because it, again, for those of you that are noticing, Rag, that volatility kicked in about a day or so ago. Remember, 3 days before the end of the month, end of the quarter, that's when the shenanigans begin. All right, gang, be good to each other. I'll see you same time, same station tomorrow.